Miles, pleasure to have you on, man. I'm excited. There's so many areas we want to talk about: life lessons, entrepreneurship, starting businesses. FinTech as a particular one. Maybe we'll start with FinTech. We are talking about before recording about how you got into the space, a little bit the story. So yeah, I'd love to hear it from you. Like, how'd you get interested in the space? Why'd you just decide to become a FinTech entrepreneur?
Yeah, I don't think I decided to be a fintech entrepreneur. I think I kind of fell into it. So when I graduated university, I worked a few corporate jobs, and pretty quickly I realized I'm not a corporate guy. I mean, there's something I don't like, I leave pretty fast. So I had two jobs, both lasted under a month. I left. It just wasn't for me. The structure, like when I was younger, I used to buy and sell hockey cards for more than they're worth. I used to negotiate and try to like get discounts and everything, and sell things and flip things. And I loved the idea of business. When I got into the real world, I realized that this isn't what I thought it was going to be. So I quit both corporate jobs and said, I don't know what I'm going to do with my life, but I'm in my mid to late 20s. I want to find something that's not just a job, but something that I actually wake up in the morning excited to do. And I said, I'm going to give myself the time to find it. And luckily enough, I got scouted by a modeling agency. So I got paid to take pictures in magazines and different things for a living to make some money while I got to find myself. So I was probably going for coffees and meetings with different startups, probably five, six, seven, eight times a week, talking to different companies. And a lot of the times it didn't feel natural, or the team didn't feel, it felt like it was like I had to force it to be a different version of myself. And then about 11 months in, I get a call from Flinks after I applied, and they hadn't launched, they had no website, no APIs. And the founder said, look, we want to meet you. We're looking for a sales partner, a chief sales officer, looking for someone with charisma who could help get this company off the ground. And I said, I have nothing to lose. I'm going to go in and meet them. And I remember the first meeting I had with them, they're like, tell me about your prior success. I'm like, honestly, I haven't had any. I'm like, this is what I want to do. Here's what I can do. Here's my personality. I'm not the most technical, but I know I could make it up with my charisma, my relationship skills. And I want to be in an environment where I get to kind of control the narrative and build my own structure a little bit. I'm not a corporate guy. And that resonated with them. Long story short, they chose me to be their sales partner. At the time, I'm like, this is probably going to be a 6 month experiment and it'll probably fail, but at least I'll get hands on experience. And I remember the first day I started there, I asked the founders, I'm like, so who do I call? Like, who do you want me to sell to? What do you want? And they're like, you don't fucking know. Like, you're in charge. And I'm like, I mean, the second they said that, I'm like, this is exactly the environment I need to be in and thrive. I cannot fail. I will not fail. So when I hit a corporate structure that said make 90 calls a day, cold calls a day, I was making over 100 cold calls a day because I wanted to, not because there's a gun to my head to do this at this time. And that time was the freedom to be like, I create the structure. I figure out what works and what doesn't work. And there is no playbook. I'm going to create the playbook. And that really excited me. So it was really like I got to run my own business within a startup. And it was a fun ride. And long story short, it worked out well because we scaled in my 2.5 year tenure to me and the founders to close to 100 employees. And I learned a lot and scaled the company.
It's amazing. It's amazing. And what employee were you? Like, what number?
I think I was literally the first.
Are you serious? That's a great
Yeah,
story,
like
man. Yeah.
day one, like there was no API, no website. Like I was literally selling air at the time.
And
Yeah.
you skipped over the part of the exit where was a pretty good success, right? Which it's
It's not technically exited, but National Bank owns the majority of it. But yeah, it was a nine-figure acquisition type of thing. Yeah.
yeah, yeah. I call that an exit where the company owns the majority stake. In my book, it's like pretty much an exit, and obviously, it's one of these. Good to be lucky, lucky to be good, but also, you put yourself in that spot, right? To be uncomfortable, having there's no playbook to win. Um, you mentioned, I want to go dive into what you mentioned, right? You didn't have a technical background, and a lot of people think, oh, to start a company you need to have some kind of technical knowledge, but you made up with that, obviously not just with energy, but something a lot of companies lack, which is business development skills, right? So how did you develop the sales side, this people relationship front? Was it something that came natural to you? Or just curious to hear you.
I always love people. I'll never forget, like in the first month of Flinks, I went to a few conferences and I met people. And if I meet somebody and they're well connected, I got very close to them, but they say, no, you should talk to this person. I talk to that person. That person would say, you should talk to that person. And there's a network effect. And it's like, and I never leave out the people I've talked to along the way. So, and when I talk to my connections in FinTech, it's not like business. Like they're literally friends of mine. I know their families. We talk, we hang out. It's like, we have monthly cash ups. Even to this day, the first 10 people I met in FinTech, I constantly speak with. It's not like I have a hidden agenda just saying, It's not like transactional because and that's why I was always against corporate culture where it says make 90 calls a day. I'd rather make 3 meaningful relationships a day. And you can't do that by having a gun to your head to do things. So I always believe everyone's different. So you have to do what works for you. And I knew what works for me is just being in as many rooms as possible, having as many conversations. I say yes to every meeting. And if a meeting's a waste of time, I could tell pretty quickly I'll get off. But I'll say yes to every meeting because you never know who that person knows or who that person's connected with or how that person can help. And that's actually how I met my co-founder at Zoom, was through someone I met at a conference. Like, oh, I have a friend who works in payments. You should talk to him. I'm like, he's like, and I'm like, absolutely. And I had no expectation going to the call, and he ended up being now one of my closest friends, like a brother to me, and my business partner. So you never know. So just having as many conversations, talk to everybody. You never know who somebody is, and also care about other people. Have empathy, be likable, and just talk and put yourself in positions to get, I guess, quote unquote, lucky.
Yeah, yeah. Life is not a straight line, right? So it's like, even your co-founder that you met was was not preordained. It was through a combination of luck and putting yourself out there. So like that's a good lesson, right? Meet a lot of people. I think particularly when you're earlier in your career, you want to have as many doors open as possible to be able to give yourselves those opportunities. I think that's a pretty good lesson that maybe doesn't get repeated enough.
Yeah, and people want to rush too much. It's like it's not a race. Like I met probably with 80 startups before I found Flinks, and nothing felt right. I remember at the time my friends, family, like, you're gonna stay unemployed forever. I'm like, no, not until I find what I want. And that I guess I never realized I was meant to be an entrepreneur because all my traits, quitting within 2 weeks because I didn't like the structure, just not wanting to do something that was not I did not feel was for me. I was very I always stuck to my guns, and that I guess it makes me entrepreneurial. And I realized like when I got to create my own structure, I was more motivated than anybody you could possibly be. And I was outworking everybody. I was, but not outworking to the point where I was going to work 14 hours a day and burn myself to the ground. But the 7, 8, 9 hours a day I put in, there was no fluff. It was pure work. But also, it's important to have a life outside of work and balance where you eat healthy, exercise, do other things to make sure when you have that opportunity or that lucky break, you get to actually capitalize on it because it's like, oh, but this guy has energy, charisma, has a personality that's magnetic. But if you're working 14, 15 hours a day and look like death, you're not going to be that charming, to be honest.
Yeah, yeah, it's a marathon. It's not a sprint, right? So I
Exactly.
think that's my philosophy. So why fintech again, right? So you mentioned, like you're not a technical specialist, but you understand the space. Obviously, got to live it and breathe it with Flinks. So yeah, why decide to continue down that path of financial services?
Yeah, I'm going to be completely honest. It's business for me is about building relationships and people. And at the end of the day, whether you're in fitness, whether you're in health, whether you're in fintech, whether you're in anything that you're doing, at the end of the day, business is business. At least from my side, I'm not technical, but at the end of the day, scaling a business is all about people, nurturing relationships, building relationships. And at my time at Flinks, I noticed that Flinks solved a piece of the puzzle, the onboarding piece and the bank connection piece. But as the chief sales officer of Flinks, being the most customer facing, I realized there's a whole other end of the puzzle that's not being solved. And when I met Mark, who's my co-founder, he, after a lot of time, explained to me his vision of plugging in data, aggregation, payments, and create a full open banking software. I realized that this could be solving a bigger problem. So that really excited me. Like at the end of the day, business is solving people's problems. Doesn't matter the industry, and it's fun to be able to solve people's problems, especially on a macro level. It's like payments and money movement and open banking is the biggest challenge to tackle in all of finance, and especially in Canada. And at the end of the day, I like challenges. Like I like challenging myself outside of work, in work. I like to just try to do hard things. So the more hard things I do, life becomes easier. So I just do hard things and tackling open banking when right before that I was before fintech I was taking pictures in my underwear. It's pretty cool. Pretty cool.
Yeah, good, very good. Yeah, difference, right? So I think working with your brain, also gives you something that longevity, right? So you said being a model, well, you won't be a model forever. So it's like working with your brain gives you that
It was
that
never the long term plan.
yeah. Um, so yeah, I want to talk about Zoom. I'm going to come back to some of these interesting lessons you shared, Miles, but I want to talk about Zoom for a second, right? Or for more than a second, actually. So you spoke about you and your co-founder. You came up with the idea. So maybe give us a sense as to the business model, what the company does today.
Absolutely. So one more piece of advice: follow the smartest people in the room. So I remember when I met my co-founder, his vision and his problem solving skills and his vision for payments and fintech and his ideas were second to none. And when he came to me and he's like, I have an idea of how to solve open banking before the banks and the government by piecing together KYC. So we have like our own KYC tool, making sure the person is who they say they are. We have aggregation tied in. We get the credit worthiness of the individual, do a risk profile, and then we have a payment gateway that ties in with that data to be able to move funds in a variety of ways and every payment rail available in Canada, including instant payment rails. So on top of moving the funds in real time, we're going to make sure the person is who they say they are. The funds exist, the source of the funds. Make sure there's no risk of a chargeback. So we're doing everything from A to Z. So we don't just see, we're not like another payment gateway that just sees payments as moving funds from A to B, but we're taking care of the whole financial interaction. How do you onboard the user? How do you make sure the funds are good? How do you make sure the funds are there? How do you make sure it really is that individual? And as COVID's happened, more and more companies need digital transformation because for every brick and mortar, there's hundreds of digital experiences being created. We've now created ways that someone can have a digital experience with one provider because we put everything in a neat box as opposed to putting 6 or 7 providers together and then hacking it together, which creates a lot of friction from a user experience standpoint.
So who buys your software today? Is it banks or is it merchants?
Banks, neobanks, investment platforms, crypto platforms, mortgage lenders, any financial service, because payments is pretty vast. So we work with any financial service and we have clients that range from all industries. And then we have about 500 clients already. And we also have something called a software portal, where it's a reseller portal where we integrate within software. So whether it's a member management software, loan management software, account payable software, mortgage payroll software, where they integrate Zoom and they offer it to all their merchants, to all their lenders. So when we sell to one, they sell to many. And they're able to then have a hierarchy to see all their individual merchants, how much billing they're doing, what their profit is, manage the entire life cycle, and add more stickiness to their platforms by adding more layers of software to their tools. So that's essentially where we've been able to scale so quickly is by integrating into a lot of SaaS companies.
Interesting. Yeah. So like, would like a, maybe it's the wrong example, but would like a Pivotal Payments or Nuvei like be?
Yeah, that could be an example. It could be other payments companies, but I would say the main ones could be member management or loan management. Let's say you're a loan management software and you have 70 lenders that use your software. They integrate Zoom and then they're going to start offering payments with data to validate the banking information, make sure the funds are there and move the funds in real time down to all their lenders. So when we sold into that loan management software, now 70 lenders could be using our software within a few months span. So in our sleep, we're making money because we're getting new accounts daily from our partners. So we don't have a sales team of 20 sales reps. We have our SaaS merchants selling on our behalf because they integrated us. So it's a plug and play.
Okay.
So for a lender to use us, they literally flip on a switch. There's no integration to do because we're already integrated into the software they're using.
Is that 100% of your sales then indirect and like through these platforms, or do you have any direct people calling you up? Hey, we'd like to, use you guys. And
So we have 3 buckets. One would be the SaaS model. Two would be the largest, the leading players in every industry. So whether it's like an investment platform or discount brokers like a Questrade, whether it's a big insurance company, whether it's the largest crypto exchanges, whether it's like a CoinSquare or Newton, or whether it's a neobank or a big five bank. So we have clients in all those sectors. So they would leverage our services for a variety of use cases, whether it's to onboard new users, fund an account, to put funds into an investment account, fund a loan in real time, but also get all the KYC details, the insights in the bank account to make smarter decisions and offer better products based on the risk profile.
And what software are you competing against? Like, is it just legacy software that's old and clunky, or is it the fact that your unique selling proposition is we do many things well, so you need to buy 5 things, just buy one. So curious is like how you compete.
Combination of both. So there's some clients that use us just for the KYC and onboarding piece, and we could compete with other KYC providers. But on the payment side, there are some companies that use archaic file systems and use bank systems, and there's 2 or 3 day delays, and there's no way, and there's no visibility. So our APIs streamline that. But there's a lot of companies, especially challenger banks and neobanks, that want to offer banking services that need so much different software. So as opposed to going to a data aggregator, to a credit bureau, to a payment solution, to a credit card provider, and having like 5 or 6 different providers not speak to one another, we've wrapped into one neat box. So we replace 5 or 6 vendors. So I tell you, like the best way to look at it is like we're looking at like Stripe's blind spots, and we're taking a similar approach to Stripe. So, for example, before Stripe came on the market, when it came to payments, it was always a race to the bottom. It was getting commoditized. Whoever was the cheapest, it's like they white label a bank, and whoever would offer the lowest price would get the business. But then Stripe came along and built really good software, embedded payments, and they actually charge 4 or 5 times the amount of all these providers, but they have the best software, self onboarding, self checkout, self everything, and they took over the market and they became a unicorn really quickly because they uncommoditized payments. So we're taking that same approach, but fighting and playing in the areas where Stripe is weaker. So whether it's on the invoicing side, whether it's the data aggregation, onboarding side, whether it's the partner portal and reseller model side, we're attacking where they're weak. And in Canada especially, they don't have a big presence. So we're really not fighting against that many. There's no direct real competitors in Canada, but it's a very similar model to Stripe. And now as we're launching the US in the next 6 weeks, I would say like that would be our main competitor, the approach we're taking.
That's amazing, man. That's amazing. And is it the same business model, like percentage? Like, so it's like it's a volume game essentially in terms of the scale revenue.
Yeah, like so our like we always price based per transaction, per bank connection, per insights from the bank account, per NSF, per so it's always per transaction. We technically do have a monthly minimum for that's for when fintechs or smaller companies reach out and we just onboard them quickly. So, but I'd say 99.9% of our revenues are from transactional, not from minimums.
Yeah, yeah, that's amazing. And in terms of like scale today, I know like you guys recently released a video saying, hey, we've hit 7-figure ARR. You seem to be around 30 employees. So give us a sense of scale, number of clients, etc.
Yeah, so it was pretty crazy. So the first year, the hardest part was honestly finding our CTO and finding someone to develop it. We knew we had a great idea, and I learned this lesson the hard way. A great idea without developers doesn't mean anything, to be honest. Like, so the first like almost a year of Zoom was a very slow grind. We were trying to convince investors that we had the solution to solve instant payments. And we had a new way of approaching payments, and we got laughed out of every room. Like, there's millions of payments providers, and no, not interested, not interested. It was to the point where Mark and I invested all of our money. I moved back into my parents. Mark, who lived in Atlanta, Canada, came in 3 weeks of the month, lived with me and my parents in my brother's old bedroom, and we sat at the kitchen table and just built a brainstorm this. And luckily, we found a CTO who I knew from my past life, and when he joined, there's a quick turning point. I remember he joined Zoom in May 2020. We launched our first, processed our first payment in July 2020. By September, October 2020, we were already at 7 figures ARR because it was such a big demand. Like, because my co-founder did thousands of integrations for payments. I had a big network. We had the demand already. We just need to find people to build the software. We knew we were sitting on a huge idea and the concept that everyone needed, but it just wasn't being built. So it was so frustrating for a long time. And as soon as it was built and we found our CTO, we went from just Mark and I, then got to 4 employees, then to 16, and then we got to like 100 clients, and we got to 30 clients, 30 employees, and now I think we just hired our 40th employee this week, and we hit our 500th client in May. So we're scaling really fast. So like honestly, it's weird because we're in COVID, so like we don't see the growth. We're never face to face. Then every day on Slack, I just see announcement of 3 new members and new names, and it's just a very weird way because I'm literally sitting at home most of the time on my couch with my cameras off and my golden retriever in my lap scaling a company, but it doesn't feel like I'm scaling a company. I feel like I'm just literally having fun, having conversations, and it's just happening.
Yeah, that's amazing, man. Yeah, the beauty of COVID, right? Where it's like, you build a company, but you haven't left your house because you're technically not allowed to. And in funding, have you guys raised funding? Is in the works? Like you said, you have big ambitions about scaling, competing head on with bigger players. So, I'd like to hear on the fundraising strategy.
So it's actually pretty funny. So like we got laughed out of a lot of rooms at the beginning. Our idea makes no sense, this and that. And then we started to get a few clients, and when we hired our CTO, and there's a bit of noise. And then some VCs would reach out, and then we told VCs, oh, we're going to be launching with this bank. We're going to be launching with Questrade. We're going to be doing this. We're going to be hitting this revenue milestone within 3 to 6 months. So if you could accredit us for that, we're interested in raising. He said, we'll believe that when we see it. 3 to 6 months later, we blew our projections out of the water. We had Questrade at full capacity. We had the largest crypto exchange with some big FIs. And then they came running back to us saying, okay, now blah blah blah. I'm like, now we're going to be launching in the US doing that. They're like, let's see if you get to the US and then to have a conversation then. So they're always doubting. It's like I felt like when I was talking to investors, they were trying to pick holes in a business model that didn't really have holes. Like, and we knew where we were going. So I actually made a conscious decision with Mark to say, let's not talk to VCs for a period of time, put our heads down and just build, because every hour we spend talking to VC is lost opportunity on revenue. And we put our heads down for a year. And I honestly now probably 10 to 20 messages a week from VCs. We get offers to be acquired, and we get some serious valuation. Like, we're valued well in the nine figures. But the thing is, every 6 months we hold off, that number has been going double or triple or quadruple. So I don't see a point of raising, like when we don't desperately need the money. And but we're always open and entertaining different ideas. But at the same time, the best time to raise is when you don't need the money. So we're open, but we're not jumping at anything. We're not actively looking to raise. But the one thing I could say about self-funded companies, I remember I was applying for a few awards, a few different things our marketing team was, and and then it said, "What round of funding are you at?" And I wrote self-funded, and they're like, "Oh no, we only take companies that are Series A or later, or companies that have raised Series A or later." I'm like, we could have, just because we almost failed, we failed the task successfully by literally not needing funding, which actually hurts our image, because there's a lot of optics, because people look at how much money you raise. The first thing they look at is like, that's like the threshold if you're part of the cool crowd or not, is how much you raised. So it's played a factor to our optics, which is why now on LinkedIn, if no one's going to toot our own horn because we haven't raised, then we're going to start telling and spreading the message around our brand about who we are, what we've done, what we've accomplished, without a single dollar put into our company. And literally started 2 years ago. We were at my parents' kitchen table. So it's been a fun journey, and we're just getting started. But like, it's funny how the optics works.
Yeah, I was gonna say no one really gives a shit about optics, right? Like ultimately, it's your own success, you're the company you're building, the problem you're solving, and like yes, there could be like maybe an argument for attracting talent, but it's like the smart people will know that if you're doing well, the traction is there, they won't really care all that much how much you've raised.
I partially disagree, because for about a year straight, I was heads down. We were all heads down. We didn't post on LinkedIn once. We were just getting like 7 figures a month in revenue all the time, building, building, building. And we did it all in silence. And when we reached out to people, people just ignored. Then we started posting on LinkedIn all the milestones we hit, all the things we've done. And all of a sudden, people were reaching out to us all the time. I hear you guys are killing it. I hear this. Optics do matter.
Oh,
And
for
that's the
sure.
one thing. Is
I mean,
so
my
people care
point.
about the image.
Yeah, the point I was saying was optics about fundraising. I think you need PR. Like for sure, every company does PR, and like, I think there's very good reasons for it. But I think the false optics of like, oh, I absolutely have to raise just so I could look good. It's like, well, if you're doing well, that's your PR, right? Ultimately, it's the problem you're solving, the traction you're getting. And then there's also just a piece of like, well, selling off equity, right? So it's like the more you wait, the less you're diluting yourself. There is
Yeah.
the count now. So play devil's advocate on the other side. It's like like if you do have a product that is working and traction, well, then you could double down, grow faster. Obviously, if you have the capital in the bank, and then the current argument is money's going to maybe dry up, right? We're not exactly in a perfect market right now. So having a war chest when other companies are maybe struggling to raise or went ahead of their skis could also be a good thing, right? So I'm just looking at both sides, right? It's the kind of call I think most people don't realize it's there's no black or white answer. You think you need to evaluate based on the current conditions, right? So that's my only point.
I would say if you're raising, raise for the right reasons. There's nothing wrong with raising, but if you're raising for a marketing ploy or to gain recognition, or for like, that's the wrong reason. But if you have a clear plan, like for example, if we raised $50 million tomorrow, what would we do with it? I don't know. I know what we need, like for our plan to the US and our plans, how much money we need. It's not 50. And we're very conservative with our money. So like at the end of the day, like, people raise big rounds and just burn money as if and also, if you're raising a really high valuation, how are you going to exit if you don't hit those targets that you're in the grand story you're building? How do you get out? How do you raise another round? Because at the end of the day, raising a round at a high valuation, but then you don't hit your projections, it looks very bad, and it's almost impossible to raise more money, and you're pissing off investors. So I don't believe in that. So if you could wait, that's ideal. And one other thing I believe in, like, I'm not a big fan of diluting a company, except for to operators in the company. So we were able to hire such senior level talent and such people that were able to get us to the next level. because not only do they have almost decades of experience in payments, in building startups, whether it's our CTO Marcel, he was like the biggest game changer when he joined. That was literally the turning point of Zoom. Our COO Tara, like she brings 2 decades of payments experience. It was a COO at a PaySafe company. Like without her, we wouldn't be where we are. We hired the best HR person who's building a great culture and helping bring in talent. And there's so many big hires. We just hired a chief risk officer who's starting next week, who founded 2 companies that sold in the 9 figures. Like we wouldn't be able to attract these people if we were so diluted. So I would rather give equity to people that not only have the connections and the brains to help us get to that next level, but also care about Zoom and are hands on in Zoom, not just have money. And if you're able to do that, I think that's a better way to do it. And there's always a time and place to raise.
Yeah, it's a good mentality. I definitely agree, man. So yeah, like better, find talent that'll help you get there. Have you had that conversation with your co-founder, maybe your CTO, about like, what the end game is? Like, do you want to scale, go IPO? Do you want to like eventually, get acquired for $1 billion, etc.? Like, have you had that open conversation, or is it more one of those like, we're doing well, let's push that in the future. There's no need to decide on these kind of things, but at the same time, sometimes deciding in advance can help alleviate tensions when
Yeah,
when that email does come in. you know.
yeah. So we do have those conversations on a regular because it's important to know the plan, like especially if like we're building like from the ground up with no external investment. It's more tiring. It's definitely more tiring to build a company from scratch, knowing every month we have to bring in this much more money because we want to hire this many more people. Because we know our team's going to go from 40 people to 75, 80 people by end of year or by January. So we need to make sure we hit those revenue milestones to get there because we're not sitting with tens of millions in the bank like most people in our stage. So it's a never ending cycle. It's literally like square one, but with higher numbers. It's like you always need to get to this level to get to that next level, which I find pretty fun, but like it does get tiring. So like we do have like we're not rushing to raise and we're not rushing to sell. Like right now in August we're launching in the US. We're going to build our software is country agnostic. There's going to be other countries as well because we talk to some of our partners in Canada. Let's say they have 100 merchants or 500 merchants in Canada. They got 5,000, 10,000 merchants in the US, and they're saying they're struggling with the same pain points as they are in Canada, and our software would help. The day we go live in the US, just like it was with Canada, we have our wait list, we have our letters of intent, we have a big list of clients and big name clients who are going to be going live with us day one. So like right now, our only focus is to continue building out software that solves problems. At the end of the day, payments isn't just moving money, it's problem solving. It's how do you create the financial interaction? So we're building more software to solve that financial interaction and then going to bring that to different countries. Once we're in different countries and we've built out our software to a certain level, then we can reevaluate and say, what's the decision? Like, how far do we want to take this? Because like maybe I've been irrationally optimistic my whole life. Like I thought the day we launched them, when we didn't have a line of code written, we were going to be a unicorn. And now it's becoming more and more realistic. But like this doesn't surprise me. So like I really want to get to that level, but just not from a financial gain standpoint, more from I was an athlete growing up. I'm competitive. Like I just I enjoy the process of trying to get there and the challenges and trying to win. And like we're in like I would say now like our worst case scenario was our best case scenario when we started. So it's like it's kind of just fun. We're playing with house money. Like I don't take it that seriously. It's not like I'm sitting at home stressed every night like what's going to happen. Like you got to enjoy this. And it's like we're lucky. Like I literally sit at home with a golden retriever all day next to me, building a company, and it's awesome.
Yeah, I love that leveling up mentality, right? It's like, hey, it's like a video game. It's like it's not. Of course, the personal game is part of it, but it's really, I think it's more of like one of those like you've spoken on LinkedIn a few posts about mindset, right? So to your point about like this positive mindset, this optimistic mindset. So curious as to like the lesson you have about this. I find it's such a good message that I think particularly for entrepreneurs where it could be tough. It's tough. It's like you have these super high lows and these really low super low lows and super high highs, and so having that positive mindset. Curious about any lessons you have to share.
Yeah, at the end of the day, everyone has challenges, everyone has stress. Like no matter how stressful it gets as an entrepreneur or how tough things look, like deep in my heart, the fact that I have freedom to do however I want to do it and create the structure means way more than the money. So I'm dealing with challenges, but these are my challenges, and I get to, and it's problem solving. It's fun. It's like you're always looking forward to how do you solve it, and to be honest with you, like most of the problems now aren't solved by me or Mark. Like we have such a smart team. So like the thing at the end of the day, if you're not optimistic and fun, or people don't want to be around you, how are we going to attract these talented people to join or attract the early stage clients to believe in Zoom? Like if you're not drinking the Kool-Aid, who will? So like I remember when our CTO joined, I told him how amazing we are, how our APIs are advanced, who we're going to work with all this, and he joined. He's like, "These are your APIs." Like I was so pumped up about it. I was selling the dream. But like, if you don't believe in it, who's going to believe in it? At the end of the day, that goes to everything, goes to every facet in life. And if you're overly stressed, people sense it, and you won't attract the right people. Like at the end of the day, you never know when that lucky break's about to happen. I ended up in that room with the guys from Flinks, and I was in a really good headspace because I spent a few months just finding myself, reading a lot of books. I got into meditation. I was working out like crazy, really eat really well. I enjoyed my time off. I wasn't stressed every day. What job am I going to have? When am I going to work next? It's a journey, and I never took it too seriously. And they could sense it. If I was in a different headspace where I was like, I need this job, I need this money. If I don't get this, I'm screwed. They would have sensed it. Like it's like everything in life. Like you never want to be the person who wants it or needs it more. And it just when you have a different mindset, and you just are enjoying the process, and people sense that attitude and that quiet confidence that you have. Look, I will outwork everybody, and I will solve every problem. Like I'm the most consistent person there is, but consistency goes beyond just working. It's it's what I do outside of work. So I'm really into breath work. I eat really clean. Like I don't really drink. Like I work out 6 days a week and play sports. Like in the summer, 6 days, 5, 6 days a week, I'm playing tennis in the middle of the day. No one knows that, but I'm going to be out working you. But I need to clear my head. Like everyone needs to do what works for them. Like all like you can't like as long as you're in a good headspace, I think everyone needs to be able to find their groove and what works for them. And like a small example is I remember when we hired our first salesperson who's now a VP sales. He's like, "How many calls do you want me to make? How many meetings?" I'm like, I don't really care. All I care about is how many deals are closed. Like meetings can be a waste of time. Like you don't need to book a meeting for the sake of booking a meeting. I'm not babysitting you. Results don't lie. When you need me, I'm a resource. I'm going to coach you. I'll help you. I don't care about any KPI except for deals closed. At the end of the day, results don't lie. I'm like, if you want to close all your deals on the golf course and be golfing every day, if you're the top performer, what do I care?
Yeah, I think if you raise a good insight, like it's what that old Stoic saying, right? It's like how you do anything is how you do everything. So it's like your how you spend your life outside of work. There is no work person and regular life person. It's the same person. So, taking care of yourself, taking care of your body, and like it's like it is part of the job. At least my mentality of like staying in shape for me is table stakes for my own mental well being because I find that's how I perform. Like at work, it's having the good physical shape helps me be better prepared at work. So I like that I'm not the only one that that has this.
Yeah,
Honestly,
absolutely. And it's funny, that goes back to the point. So my co-founder is like a genius. Like he has like the cure for cancer for payments. Like he has the answer for open banking, and he had this idea. I'm like, there's a lot of good salespeople. There's a lot of charismatic people. There's a lot of good people in this world. I'm like, why do you choose me out of all people in the world with your idea? He's like, I have never seen someone so disciplined. I've seen how you eat. When the second you say you're going to do something, you've never not done it. Your charisma, your positivity, your energy, you are just the most reliable, good person I've ever met, and people love you, including myself. And at the end of the day, like I'm not that smart. My IQ is not like the other entrepreneurs who are building billion-dollar companies, but I care. I'm consistent. I show up, and I learn. There's so many smarter people around me, and I absorb, and I'm a sponge. I listen to podcasts every day. I read books on business. I read books on psychology. I read books just to like hone in on my craft, and I constantly love learning, and that's why I'm still doing it, and that's why I'm doing it. And it's that's why I don't get stressed because I see it as a game that just keeps leveling up, not as a stressful thing. I need to get to this level by this day. It's like I don't see it that way.
yeah, it goes back to like that negotiation tip, right? It's like if you're desperate for it, you're not in a good negotiation position, and also for yourself, if you're desperate, I need to like have that win and make X dollars of an income. Probably you're probably not going to get it, right? So I think it's a good lesson. Maybe a final question or two for you, Miles, about Zoom and like the vision, right? Like, where do you guys want to take the company? How big do you think the opportunity is? Like I said, as you guys are launching in the US, or yeah, I'd love to hear you about like the bigger ambitions that you guys have.
Yeah, so launching in the US is a big milestone for us because as well as we're doing in Canada, we know we could 10x that in the US, especially with the LOIs and the demand we already have. And we're constantly just building more and more software. We're going to be launching in other countries in 2023 as well. So our goal is to be as global as possible with our software because technically our software is country agnostic. And the team is growing at a really fast rate. However, I don't really care about the number of employees because a lot of companies have 150 employees, but they'd be better off if they were 50 because at the end of the day, sometimes you want to get the top 50 people as opposed to having 150 people. Like when we hire someone senior, we'd rather have that person do that role than hire four people that would not be as good at that. Like that person does more than three or four people could do as individual contributors. So I hate when people just always say it's based on number of employees, but based on how much we're building and how much we're doing and how many clients we have, our team is going to double over the next 6 months. And that's because we need more developers, we need more operations people, there's more and more clients. Like I feel bad for our ops and integration team because we have virtually the same amount of people when we had 100 or 80 clients as now when we have 500. And like we need to make sure that each team grows to its respective level, that we don't drop the ball anywhere.
Yeah, yeah. So it's like structure and adding processes and yeah, scaling a company, man, which is fun. So it's like yeah, second journey, man. So like it's been fun, obviously, to watch your journey from afar and now get to learn it up close. So Miles, yeah, hats off, man. Continued success. Final question: if people want to learn, connect more, and be part of the journey as well, what's the best way?
Yeah, you got me on LinkedIn, Miles Schwartz, or email me, miles@zoomrails.com. I'm an open book. Like I said at the beginning of the podcast, say yes to every meeting. So I'm not going to ghost you. Reach out. Happy to have a conversation.
That's awesome. Yeah, thanks for not ghosting me on this podcast. I appreciate that you accepted. And
I debated it, you know?
Miles, thank you so much, man. This was great.
Thanks. Have a good one.